Yo, what's up, people? And welcome back to Mad Motion channel. And today we're actually making a different video of how to start trading in 2025. So sorry for not making the videos, and today is actually going to be a special video of me explaining how to trade. There's going to be only a key points pretty much on this video, and we'll be showing a PowerPoint, which I'll be explaining as well in this video. So I guess we can literally instantly get into it. And yeah, so how to start trading. It's going to be a beginner-friendly guide to building a trading skills and mindset. So number one, knowing the basics. Basics are really important in this trading aspect of knowing how to do the stuff. So if you perfect this, you actually have more chances of maximizing your winnings and minimizing your losses. So first, learn how financial markets work: forex, stocks, crypto, and etc. So if you're already coming over from stocks or crypto and everything, that you're good, pretty much probably have a solid foundation and knowing like what the spreads, leverage, margin are, and maybe pips and lot size at that as well. So that's where we get into the understand the key terms. So if you guys are new and just want to get started in trading, that's where it's gonna be getting harsh. You have to know them, and I will be making a future videos of what our pip, spreads, leverage, margin, and lot size are. I will be explaining them in depth further on if I make that video in the future. But if you guys want to, just hit the comment below. I will probably make that as well. Well, not probably. I will surely make that. But yeah. So if you don't know them, the best chance would be researching them and everything. And if you're getting into the trading, they are really important to know, and because without them, you're not going to be able to trade. Pretty much, they're really important. Like I told you, basics are really important. So the third thing that's knowing the basics is learning how to read charts. That's where the market experience comes in. Reading the charts gets into your market experience as well. So the candlesticks, the support, resistance, pretty much. So like retracements and stuff like that, and order blocks and that, like that, they're support. So these things, they really are important in building your market experience. If you know them and everything and you keep it consistent, you will surely be maximizing your winnings in trading. And how they will gonna help you in further on is literally in everything you're gonna do, like in trading. Let's say when you're gonna be setting up your trade, that's where you're gonna be using them, the support and resistance, those stuff. And so when you're getting into trading, if you're new, like from stocks and the crypto, it doesn't matter. It's for beginners. You want to start trading with the demo accounts. You can either use TradeLocker or a MetaQuest 5. Those MetaTrader. Is it? Yeah, MetaTrader. Sorry, my bad. But yeah, MetaTrader 5. In them you can open a demo account in which you can build your market experience, and because you're a beginner, don't waste your money and buy any funded accounts or such a thing as putting your own money and risking them. You're gonna just start losing money, and you can watch the video above. Well, check out my video of why discipline beats profit and 5 costly day trading mistakes I made personally that I would never want to make again. And they will help you in, hopefully they will help you in not making the same mistakes as me. But everyone makes mistakes. But yeah, so that's the thing. Start with demo trading before risking real money. That's where the basics comes in. And let's get into the second thing, trading psychology. It's really important. So The one thing you want to do is keeping your emotions under control and avoid fear and greed. Fear is what you're going to get a lot of times. Even I still get it. But don't let it get overwhelmed. Fear is what you can train yourself not to feel anymore, pretty much. Well, not to be affected by it anymore. Fear is what you're going to be, and greed, which will be trying to slip you or put your foot so you would slip, fell on it, and you would lose all those trades. Literally like that. Fear is what's going to be making you to get out of the trade instantly before, like when you're losing money and everything, you're going to be like going out of the trade early on and taking a loss. That's what fear is. And you're probably not gonna be maximizing profits, what you can get. Greed is what you're gonna start maybe as well losing trades and making less money. That's what greed is. You're gonna be wanting, I want more profit. The thing is about trading, it's not about profit. It's about beating the market. So greed is what wanna make you want more profit. And you're probably gonna go above that base where it's gonna be going and trying to make that money, or getting in the trade early on and getting that loss and taking that loss, literally losing money. So the thing is, that's where we get to the second. Focus on process, not immediate profit. It's really important thing that you want to know about that stuff. Sorry about that. So it's really important thing that you want to do that. Don't focus on profit. The thing is, on your first stuff, your first stuff you want to focus is on building up your experience, the market experience, the reading charts, the setting up your trades and everything. Where did you set up your entry point after what it hits and everything like that. That's what you want to focus on the process. And after that, all that market, it's still not going to be about profit. It's going to be about you beating the market. The sense of accomplishment, I feel, is not about getting profit. It's about beating that market. Even if I go with the flow, it's just that sense of accomplishment I get of beating that market is insane. Like, it helps me build that my confidence and everything, but also teaches me a lot of stuff. And one more thing, stay patient. Not every setup is good one. It's really good one. You have to stay patient to get that good trades and everything. And not every setup is a good one. That's true. I took 4 losses. Previous videos. Did I had bad setups? Indeed did. Maybe I did have good setups, but the market didn't want to go that. I should have known that. Well, you can't know everything. Everyone takes losses, but you have to stay patient. If you're not, that's where the greed comes in. That's what makes you not to be patient and entry the point early on, like I did in 4 videos. I've seen them. Accept that losses are part of the game. Very true. Very, very, very true. You have to accept them. If you don't, you're gonna keep losing. Because it's gonna get in your mind and you're gonna start fearing the loss. You're just gonna see the market going down a little bit, your entry point, boom, you're gone from trade. And then the market, boom, goes up. Because what? Because you literally let fear take over you and get out of that trade. Just, if the trade is lost, just let it. Then just take a recap, take your journal and write it down what you did wrong and do the same for the winnings. And compare them and you will get there. Third one, discipline. Discipline is really, really important as well. So the thing is, you want to stick to your trading plan no matter what. So my plan is I will go to 1 and 4 hours in my trading, on my day of trading, if the Forex Factory shows me good news and everything, and if there's no high impact news, pretty much, or I'm past that, and then on that day, I will be making a trade from 1 to 3 p.m. on New York session, when the New York session pretty much opens. So in that 2 hours duration, I will be looking for a trade, and that is my trading plan, and I'm gonna be sticking to it no matter what. In such a case where I may not be able to film a video, I did exception on Wednesdays. I made videos of me trading a London session. They go well. Sometimes I made losses as well. So that's where we get to second fact. Avoid revenge trading after loss. In the videos where I made losses, I was making a revenge trade from that, and which made me lose the money. Was it good? It wasn't. I did a mistake, and it was a mistake. That's the thing. So also, that's where they get third point. Keep a trading journal to track progress. If you took a revenge trade, fine. Just take that trading journal, write down your loss, what you did wrong. You know for sure you did revenge trade. That one, I don't know how you want to mark it, but that's important. You don't want to be you want to type that in, be slapping down the wall or something, and making sure you don't make the same mistake. You lost the trade, that's it for the day. You get off. You go chill. Maybe make some food, go outside, drive, ride, whatever you do, you want to do that. Just clear your head. Don't let the loss take over you. So that's the thing. And then, well, it's the same as first point. The fourth point is trade only during your planned sessions. And that's literally what I mentioned at the first point. You want to stick to your trading plan no matter what. So why you keep changing your plan? If it's working, it doesn't matter if it's not working. It's not the strategy fault. It's your fault. You're doing something wrong. If you made a loss, it's your fault, and you have to look into it because it's not a strategy fault. It was working before. Suddenly that's not working. That's not possible. You did something that it didn't work. So you have to fix your mistakes. So that's where we get into it. So always trade only during your planned sessions. I made an exception on Wednesdays just so I could create the videos for you and me trading on the London session. Well, I tried to make sure I trade on New York session, but not always it's going to happen. So accept that. So also, that's where we get to check out my video. Why discipline is more important than profit in trading. Surely check that video. It's going to be really, really important. You watch that video. It will help you during your trading journey. That's where we get to fourth. Strategy. My method. Well, my method. Your method. It's probably going to be using the same, but well, the time to trade is going to be on you whenever you can. The best time to trade, 1 to 3. I would say 10 to 1. They're the best times, I would say. Or 11 to 1. But yeah, that's where you have high volatility market. But you have to trade whenever you can, whenever you have time. And don't be making excuses that you don't have a time in the day, because I have time whenever I even go to university or working. I come back. I don't care if I'm tired or stuff like that. I don't care if I have to go and I have to prepare myself. First I'm going to do is make that video, do that trading, and then go to whatever I want. Do whatever I want. Stop being lazy. So yeah. So let's get into strategy. Fourth, key levels. 1 and 4 hours. I mark liquidity zones, highs and lows. They are really important. You will see them. So best time to trade, in my case, I do 1 to 3 p.m. New York session forex. The 1 to 3 p.m. is my like work shift. It's like you're working 9 to 5, and after your work shift ends, you don't want to work no more, and you just go home and you stop working. It's the same here. I just work 2 hours on here. If I find a trade, perfect. I enter that trade. If I don't find the trade during that duration, done. I'm out. You won't see me anymore there. I'm probably gonna get back on next day only, because it's like a work. You're working, you're looking for that trade, and that's it. That's where we get to how to trade. So first, you want to hit the price to hit the key level. It's really important, because when it hits the key level, that's when you're going to start looking for that, well, a trade. So you scale down to 5 minutes. On 5 minutes, you want to be looking for break of structure and imbalances. Imbalances is what I call in videos inverse fair value gaps. Some people call them balances. I call them inverse fair value gaps. They're all the same. So in 5 minutes, I'm going to be looking for a confirmation. So let's say in 5 minutes, we get that break of structure and inverse fair value gap second. Mostly they're like literally came the same. But yeah, you get those, right? Then after that, after the candlestick closes above either these, like when it fills these two, then you want to go to 1 minute and be looking for order blocks, breaker blocks, either break of structure. Probably going to get break of structure again. So you're going to have 5 confluences for sure. And that's where the other confluences. So we also have fair value gap and equilibrium. Those two, if you get them, you get them. But if you get them, these 7 confluences pretty much make sure that the market is going to go that way, that trend. That's when you have to be looking for a new trade. And that's good. Well, entry point trade. So yeah. And then you place your stop loss where your ID is invalidated and take your profit at other key levels. And that's pretty much it. Yeah. And then 5, gaining market experience. Start small, focus on learning, not earning. I told you that before, as you remember. You have to. And then review your trades daily and note what worked. Also mention that it's literally the same as start small, focus on learning, not earning. They're both the same. And then stay consistent with one strategy before testing others. That one is really sure. If your strategy works and you start losing, that means it's not strategy fault. You don't have to say strategy. You have to it's your fault. You have to look into it and check what you're making wrong. So also learn from both wins and losses. Really, really important. Mark them. Well, take a journal out, write down whatever on your PC, or if you have physical copy, then compare them, like what you did good, how did you win, and how did you lose, and what you did mistake. And over time, you will develop an intuition and confidence, and that's what it is. Really important. And then final thoughts. Focus on learning, not fast profits. Protect your capital. Risk management is key. And keep emotions out of trading. Keep your emotions out of trading. Decisions. Or you're not gonna get anywhere. If you can't keep them, then that means the trading is not for you. You are not made for it. So keep them and train yourself to keep your emotions out of your decisions. And stay consistent, and experience is your best teacher. So get that experience in everything. Thank you for watching, and stick out to this video and watch the other videos to mention in the video. And yeah, I see you guys tomorrow, and peace out.